Looks like Palantir's locked down an $800 million deal with the Army. And like your weird ex-girlfriend from high school who keeps demanding the presents she gave you back, Palantir's stock price has been hassling investors with an awful lot of give and take lately. Check out the 3-month chart with me here, and don't be ashamed if you have to grab a tissue, cause I'm right there with you, buddy. But after hitting highs unseen since like February, we're back down to super mediocre average $23 world, right around my own personal cost basis on the stock. But that all changed after hours when this big Army contract was announced. There have been whispers of something like this, you know, going through the pipeline, especially after what seems like a really long drought of massive contracts like this. Yeah, we get news here and there of the little like $1 or $2 million deals with companies or whatever, but when we counter that with the hyper-regular carpet bombing of insider selling going on, it's hard for the average investor to figure out if they should have gotten out yesterday because Papa Carp is just trolling the crap out of us, or if we really should stay on board for like the next 5 years like I've been suggesting all along. Taking a bit of a deeper look at the deal, they announced that they've locked down the vast majority of the $823 million deal to provide data and analytics software to the Army. If you're not super familiar with Palantir, in the case of military applications, they provide the Gotham software, which like many analytics tools is capable of sorting through limitless amounts of information, but then unlike any other tools actually, providing actionable insights to people in leadership who may or may not be super technical. The system's smart enough to be able to scour data through various security classifications globally, and gives the US and its allies a massive leg up on the competition. And not unlike your boy, Palantir stands firm for democracy and Western values at its core, and will not work with organizations or countries whose governments differ, which is cool. But speaking of Western values, my name's Trey McKee, and I'm a Canadian-American investor entrepreneur living in Japan. And here at Benevolent Investors, we aim to grow our investments wisely in order to dump all of our gains on the people in our community who could use another buck or two. So this particular project, not unlike my daily stops to the bathroom, has sometimes been called Capability Drop 2. There was a showdown between Palantir and a company called Bay Systems, and it sounded like Palantir ended up with the win. In the deal, Palantir will provide service for the coming 7 years in partnership with the Army's Program for Intelligence Systems and Analytics. So I know like a third of you are thinking, dude, Palantir needs to stop being so dependent on the government, which I think is a valid concern, and one that I sometimes share. Insert witty but completely offensive joke about entitled welfare freeloaders buying PlayStation 5s for $900 on eBay at the risk of offending my viewership here. Over the years, revenues have definitely been government contract-centric, though we did see growth of 90% in commercial revenues, along with a 32% increase in commercial customer count, as well a couple months back in their earnings. So I'm really interested to see how that balance continues to shift in next month's earning report. But I did want to take a step back from the nagging worries about government overconcentration, because after all, there are a lot of businesses that depend on a single customer, and that's actually a really valid business model if you're providing something that's irreplaceable. Northrop Grumman and like every other defense company ever. And yes, for a lot of us, the daily ups and downs are driving us crazy, but let's remind ourselves about the acquisitions and SPACs they're working on or invested in that could legit make Palantir into like Terminator Skynet in the coming years.
Hey, what are you doing here?
But hopefully in a less take over the world and destroy all humans kind of way. Fans of buy now, pay later finance companies like Affirm are excited about Palantir's investment in Indonesian SPAC Kredivo, which already has more than 4 million customers and is going public soon. And along similar market lines, AdTheorent is another SPAC deal that uses machine learning as a programmatic digital advertising company. Plugging this kind of capacity into what Palantir already offers is pretty much guaranteed to provide business clients with lots to drool over, like a good bag of pizza potatoes. Crap, that's good. Dude, super not a good idea to start eating those in the middle of a freaking shoot. Alongside other major investors, Goldman Sachs and UPS, Palantir dumped some cash on the Fast Radius SPAC, which aims to make physical products for customers using proprietary software. They aim to lead the way as the first cloud manufacturing digital supply chain company in the Industry 4.0 market. If that last sentence was a bit of a jargon overload for you, just know that Palantir getting involved with manufacturing and supply chain systems is going to break the status quo in a lot of industries. Also, in partnership with sluggers like Microsoft and GM, Palantir is dipping its toes in the connected vehicle data market with investments in Weejo? Weho? Weehole? They'll be working on traffic management, smart city planning, fleet management, insurance, and mobility, all of which makes my sitting in Los Angeles traffic for 3 hours a day on the 91 freeway ass happy. And that's just the tip of the iceberg. Covering other markets like healthcare, pharmaceuticals, biotechnology, e-commerce, geospatial intelligence, and DC fast charging for things like flying cars in their partnership with RELIANT too. So again, as Carp has been saying all along, this is a very, very long-term buy and hold stock. If you're finding that you're frustrated trying to chase the peaks and valleys of the stock price, my strategy of combining shares and options might help you a bit. I should mention here that I am a longer-term investor. I don't try to chase, little dips or little jumps, so minuscule movements don't really faze me. I'm usually looking at stocks for 6+ months, if not 3 or 5 years. And a lot of people around me are kind of frustrated by Palantir because it's not making big jumps. So they're like, I'm just going to play with options and try to pick up, 1 or 3% here or there or whatever. But the problem when you don't have any shares and you're just trying to play options is that you always have some degree of FOMO going on. And on the flip side, if you're only in shares, you can't leverage those small daily movements to make significant gains either. So on top of Palantir shares making up a big healthy chunk of my portfolio, I'm regularly selling covered calls, cash secured puts, and I'm also buying around the money calls for a couple of months out if I think we're going to see some gains coming up soon. Which is what I did yesterday and should print nicely if we can keep up some of this overnight momentum too. But if those options don't work out immediately, I still have a few months to see if they pan out, because I'm not trading super short term. And even if those options don't work out, I'm not FOMOing out of control because my strong shareholdings don't have a time limit on them like options do, and I know they'll eventually pay off. Let me know if you have any more questions about, how I do that down in the comments section as well. So I think a lot of us are really excited about what Palantir is going to be able to do in the coming years, but if you're finding that you want a bit more stability in your portfolio, check out my series on semiconductors, where I recently did a little mini-series on Intel, as well as an in-depth analysis on Micron. If you're wanting to learn more about Palantir, please check out my playlist here. Don't forget to stay generous. I love you guys, and talk to you in the comments section.